Hello, everyone. Thank you for joining today's webinar hosted by BitMEX and ProfitView, where we'll walk you through how to set up and run a trading bot on BitMEX. We'd like to remind everyone that this session should not be taken as investment advice. And as everyone is aware, trading crypto is high risk, so please make sure to do your own research before you start trading. And of course, be prepared for any losses and only put in what you are comfortable losing.
So what you see here is a running grid bot, and you can see what a grid bot is. It places sell limit orders above the trading range and buy limit orders below. And the idea is that as the price moves, you'll get hits on both sides and you'll profit the difference. So that's what we're going to show you how to build. And I'll go through a few slides which explain the background of that. I'm going to go through regimes, which are impact the way you trade, the actual algo trading, the concept of signals, where bots fit in, and then explain why we use an event-driven approach, and then we'll get into the actual trading. So sentiment moves markets, and when there's new information, it starts momentum. And we've seen a little bit of it today, actually. I'm not sure what the information was, but it's in any given day, you'll get a bit of momentum. When there is no information between pieces of information, you get a sideways so-called mean reverting regime. And when you build an algo, you will normally be considering some particular regime. So this is what a mean reverting regime looks like. This was taken from BitMEX some time ago, and then moved into a bit of momentum and then momentum back up. Now, if you're putting together an algo, you're really just doing what you normally would do when you're trading. That is, you buy low, sell high, but you're just encoding that with a program. Now, when you're actually coding, the great thing is you're not influenced by the emotion of the market. This gives you an advantage. Then you can focus on finding a novel approach and put that into code. And then when you trade, so long as you maintain your discipline of allowing your algorithm to do what you designed it to do, you can reap the rewards. So you need market data and a way to execute in order to put together an algo. And then what you add to it is a signal which provides alpha. And that's what trading is all about, finding that alpha generating signal. So in a very simple way, this is what you've got. The algorithm will do things other than, it will contain a signal, and it will do, then it'll also do the sort of mechanics of getting it to the market. Our infrastructure with BitMEX looks like this. So the market data comes in from BitMEX WebSockets, and then we feed it into our signals that, and this is what you actually write in the code in ProfitView. And there's some other interesting pieces which we'll go through another webinar. Now, you may be familiar if you do quite a lot of trading of candles, candle charts. This is a very convenient way to view the markets, and what we see, in fact, in BitMEX, that's very useful. But if you actually run algorithms on candles, you have a problem, and that is what happens if you have a big event during the candle. That's why in professional environments we use event-driven systems, and that's what we went for in ProfitView as well. So that when you write your Python code in ProfitView, you will actually be able to write code that responds immediately to events. So in ProfitView, there's no restriction on what algos you can write. You've got full Python 3, and there's your imagination. Let your imagination run wild. All of these bots can easily be, well, relatively easily, if you've got a bit of skill, be implemented. What we're going to show you is a grid bot. Now, the reason is because if you do a search on trading bots, or maybe crypto trading bots in particular, you'll hit a lot of grid bots. Most of the big, if you go on one of the platforms and search by popularity, then you will see grid bots at the top. Sometimes tens of thousands of people using a particular grid bot on one coin. And grid bots are an example of a bot that takes advantage of the mean reversion regime. So as I showed you before, it puts a ladder of bids above and below the trading range with the hope of capturing trading as the market moves up and down. Mean reversion is when is the observation statistically that when prices go up, that tends to be an outlier, and so if they're high, the next prices are likely to be lower. That's the signal, and so it takes advantage of that signal. A very simple strategy, but a very popular one. Go to BitMEX, get an account. It's like over here, API keys, create an API key, make sure you use order position, the permissions, and that will, I won't create one, well, maybe I should. Webinar.
Maybe a read-only one, Richard, so no one takes a screenshot if you're going to create a new one.
Yeah, that's a good point. Well, I won't actually go. Now you've got me frightened. I won't actually. I certainly won't click reward. Yeah, okay, withdraw. You get the idea. It's not that hard, okay? So you create yourself your API key, and you get an API key and a secret, and then you come over to ProfitView, and you go to exchanges, and then you select an exchange, you choose BitMEX, and then you paste in your API key and your secret, and then you're good to go. You're connected, and you can go. You got to have either a hobbyist or active trader account. So use your coupon now. It's not expensive, but we're talking 29 at 59. If you're professionals, then you're richer anyway. So yeah, you go to your exchange, you get your BitMEX in there, and you're good. You're going. You'll get this as well. You get to this P&L as well, which is very useful if you're getting serious. And you will be able to write your Python code. When you start in ProfitView and go to the Trading Signals tab, then you will see an initial untitled file, and it gives you exactly this. And you can see in this this is standard Python 3.9 at this point, and you can see that each of these functions here, you can see their name, they respond to certain types of events in the market. So every time there's an top of book quote, it'll call this function. Every trade will call this function. That is trades on markets that you choose. So let's choose a market. We'll go for XBD USD. That's the perpetual contract on of Bitcoin against US dollar. Then if you've entered through the API, in your coding, if you've entered orders and they hit a fill, then you'll get something here, order updates in general here. And as soon as I click this start button, this function will be called. Now I'm just going to get rid of everything here and give you an example to see what I mean. I'm going to take away everything except quote update. And another webinar, I'll explain these HTTP route methods. They're very useful and interesting. So here I'm going to stick just a little bit of logging. What do I log? Data. Now, if you look up at the docs we have and quote update, what it gives you back is the bid and the ask, gives you the price, and it gives you the quantity, and also it gives you the time. That time is the number of milliseconds since 1970, which is a commonly used time in Unix operating system, the Unix operating systems. So I'm going to run this, and here we go. Sorry, this is something, a mistake I often make. I have to save it first. So I'll save it, stop, run it again. And there you go. If you can see at the bottom of the screen here, we have bids and asks coming through. And if you look at the top here, and if you can be quick enough to see the prices, we're keeping exactly on track with what's happening at the top of book in the live market here. The other point is, yes, there you see the time coming in, and I'll show you that just in a couple of seconds. So stop this one, so when we're sorry, the reason I'm going to do this one is because it's quite interesting, the values you get. What I'm doing here is now I'm logging out that time subtracted from the current time. So time, the Python time gives you the time since 1970 in seconds. So multiply, that's a floating point number, multiply by 1,000 and subtract this time we're getting from BitMEX, because that's the time these orders actually go in the book. So it'll be interesting to see how long they take to get to us here in the server, we in our server side. So I'll start it and let's have a look. So this is in milliseconds. So typically it's between sort of 1.5 to 3 milliseconds round from the order book to us. But you'll see occasionally you see 11 seconds, 21 milliseconds, 21 milliseconds. So it's around about that, and yeah, another 6 there. So the interesting thing about this one is it's really pretty quick. And if you were rolling your own system, it would be hard to beat it. But also this variability means even if you do manage to carve a few hundred microseconds off the time using C++ or other compiled programming languages, this type of thing, it's not going to do you that much good because you've got such a lot of variability, which is just because we're using, like all exchanges, crypto exchanges do, WebSockets, and so you're not going to get that much advantage. So I'll stop that one. And let's have a look at how we're going to put together the grid trading bot. One thing we need to do, and the way grid trading bots work, is every certain amount of time, we'll say a minute, they re-enter their ladders of orders. So you'll see, as you saw in the initial screen there, we want to have a ladder of order, but the market will move, and you want to follow the market. So the mechanism is the mechanism is to repeatedly run this process, and we use this mechanism here. So we import the threading library, normal part of core Python. We find the time. We do this on start, so it repeats on start. We take the time now. Then we do whatever we want to do. So later, this will be the algo. And then we repeat it using this idiom here, using the threaded timing package. We just take the interval we want. In this case, it's just, in the demo, it'll be 3 seconds. I'll start this. There you go. So it's every 3 seconds, and you see that's working.
So Richard, while that's running, is on start a function of class trading that comes as default?
It is, right? So it's basically, we're talking about event driven, right? The event for on start is pressing that start button. Okay. Now just to show you this, I'll change it to 1 second, so now you'll see it's 7, then 8. So it's working. This will do. Okay, so I'll stop this, and so now our idea is we've got to, within the update signal method, cancel existing orders, then post 2 sets of orders, limit sell orders above the trading range, limit buy orders below the trading range. So the question is, how do you calculate this, the trading range and so on? Well, I'm going for the simplest way I can find, and so that's what I've got here in first try. I'm using a class just to collect constants up here, and let me take you through it. So the thing is, one thing we need is that trading range. So the way we'll do it is using that quote update I showed you before. You'll remember that it has in the update, as you can see in the, you get the bid and the ask, and you get the price of each and the time. So we'll get the bid and the ask values. So that's the first of this an array here. That's why we say 0, and we'll put them in these variables. Now, then when we start, we start repeated update. Then that causes this update signal function to run. In that update signal function, as I just said, we'll cancel the existing orders. We'll then put in place, I call them, rung by run in the ladder or grid, however that's what I choose to use. We'll have how many? In this case, we'll do 5 rungs each side, and then we'll sell orders above, buy orders below, and then we calculate the price very simply, but that's based on the increment. So the increment we get is basically the standard deviation, and there's a simple way of calculating standard deviation, or an approximation of standard deviation, and that's simply the range of values divided by 4. And if you look it up on the internet, you'll see that as a sort of a popular, easy way to calculate the standard deviation. Standard deviation is not that easy, not that hard to calculate, but just for the sake of simplicity, that's what we'll do. So what we do is we use a convenient ProfitView method called fetch candles, and as you see in its data member, it'll return the open, high, low, and close. And to get the range, we just take the max of the high and the min of the low, and then, as I say, divide by 4. So that gives us our increment, and then we calculate. I've added a method to get the price out of that. Very, very simple. If it's a sell, then it's the ask plus the increment, and then multiplied by whatever rung you're on. From 1, then that's just the increment, and then double the increment, triple the increment, up to 5 times in this case, and similarly on the other side. Now, there's one more thing to take care about, and that is that in this contract, this XBT USD, there is a minimum price increment of $0.5. So you've got to round what the price, or it'll simply be rejected. So let's actually run this and see what happens. So I'm running it, and there you see those grids in the market, and that's basically our algo. But there is a problem with it, so I'm going to stop it, and I'm going to cancel these trades. So I've changed. Usually my screen is a different size, so I can more easily do these cancels. Anyway, there, I've canceled them. And the problem is that, yes, we are right now in a fairly nice mean reversion market. But what if there's a sudden trend? If that happens, it's going to catch all those, say it's a trend up, it's going to catch all those sells, and then a minute later, it's going to put in more sells and catch all those, and we're just going to be selling into a rising market. We don't want to do that. And there's a lot of things you could do to reduce that sort of risk, but the one I'm going to show you is simply managing your inventory. What I mean by that is that if you've gone too much the other way, then you can decide not to put in limit orders on that side. And the way we do that is we add this calculation of our net position, and that simply uses another method provided by ProfitView, which is get positions. So and it returns in particular the current position size. Because we're only trading in this example XBT USD, we don't have to bother with the possibility there might be others there. It's only going to be XBT USD, and so we just grab that. If it's and if there's nothing there, we return 0, and that's how it works. So let me run that one now and see how that works. In fact, it's not going to be that interesting because it looks just like the other one, and we're not going to wait around for it to hit one of these limit orders, because actually one thing you might have noticed is they're pretty wide, and they're wide because I'll just close them out and stop it. They're wide because when we calculated using fetch candles, the range as a proxy for sorry, okay, as the range as a proxy for the standard deviation, fetch candles by default goes back 1,000 candles. So that's 1,000 minutes until now. There's been plenty of variation in the market, and so it's just going back too far. When you do work out a standard deviation, it would be the same. You wouldn't go back that far. Now we can add a parameter to fetch candles to restrict that, but what I'm going to do in this case is just add a modifier to the size, to that width, and that's what I do in what I call here final product, which has got a few other extra things in it just to get it into a good shape. But you'll see down here we multiply it by something, and the default is this multiplier parameter, and I've set that at the moment to 0.5, but we can lower that. Now what we're looking at here now is the real algo, and I'll run that, and then we can possibly have a look at some questions and have a bit of a chat about it. So I'm going to start that now, and what do you think? What do you think, Pez?
I don't think you're going to get any fills in the next.
It's still too wide, isn't it?
I think maybe you need to wait for US Open in 30 minutes.
Well, in that case, we got to go narrower then. Should I go down to 0.1?
Yeah, go for it. Reload.
Okay. Reload. So the next in the next minute, it'll. Another thing we could do is widen the interval, but that'll be a little bit boring. So we just wait for the next, or we could, widen the interval gives more chance. Basically, it's like a box around this thing. How far back do you look to calculate standard deviation? Whether you have a multiplier on it? How long do you wait for a hit before you reset? These are, the parameters. So actually, I think I have to stop and start this one in order to get that that multiplier in. So yeah, now we've that's pretty narrow. We're definitely going to get some trades here. I want to see some action. One problem, I mentioned how when you run an algo, the great thing is that you're not thinking about the market and so on. But one thing about this is that you do actually have quite a lot of control over your algo while the market's running, and you can let your your emotion get involved. It's a difficult thing to balance. This is a simple algo, but with this you can build other things. So you can most certainly do this because we make this available. TAlib, right? And then I'll just put it put it here. Then you go, TAlib dot. If you're aware of the TAlib library, you've got. It's a great library and very fast and complete and well understood. So if you have a huge number of potential technical studies available through TAlib. We also provide useful things like is normal and SciPy, NumPy, etc., etc. A few more, and we will add more on non-standard libraries. Or you've got the whole Python 3.9 at this stage standard library. We're very responsive to people who put forward serious suggestions as to improvements to. In TradingView, you as you know, you can create alerts, in the alert you can have a webhook, and so if you choose something like this, it's a question. Do I need to do a GET request or a POST request? I can't remember. But anyway, get trade. I can do it here anyway. Look, I tell you what, I will stop this because otherwise it'll just mess around with me. I'll close out the orders. We've got some open positions there, but they're no problem. So just to be, it's worth a webinar in itself, but we have this decorator called HTTP route, and it means that you can have any number of these, and whatever the name is, that becomes it becomes part of the URL. I'll just show you that. So we do return. Let's see. Well, I can't go so far as to create a TradingView webhook at this stage, but this is where you do it. And so you create a TradingView webhook, give it some JSON to send. That JSON comes in the data here, and then you use that data to do something like, to do some trade. So you then go, self dot, create market order, put in whatever you want here, then take whatever it is from data. The data will probably be the price and the something that's produced by your TradingView chart, and the orders in the market. Yeah.
Do we support WebSockets? So all of the functions that are doing event-based requests, or I guess requests is right, or events, those are from the WebSocket. And so that is coming from the BitMEX WebSocket. API call limits. No, it is your account, and our BitMEX API works on your account level rate limits. If you start trading serious volume, because you're running a bot instead of necessarily managing it step by step, or manually, I guess, you can absolutely reach out to our customer support, and we can see if raising your rate limits helps. If you were running this bot, you probably wouldn't hit the rate limits. It is actually, if you're spamming BitMEX, it can happen. But if you're running a grid bot where every minute that you're updating the things, you're not going to hit any limits.
Yes, hello, can you hear me?
Yeah, definitely. Hi, Billy.
Hi, nice to talk with you.
Yeah.
Thank you for the webinar.
Great.
So I have a question, about can we just taste it on historical data? So let's say, can you take any, let's say, random 1 hour period at Solana and try this kind of grid, like maybe on Solana, yeah, every back test every, let's say, 20 cents. Can we see, like, it's so easy to see the results in just a couple of minutes? Just random 1 hour with specific
I know.
lines,
I mean, right? It's a good thing to back test, and it's a commonly requested feature. It's quite a lot of work, but we will get to it. But also there are other useful things you can do one thing I should say is that because we're in crypto markets, the sizes you can trade are pretty small. So testing in a live market is something that is sort of uniquely possible in the crypto world. So that's one point, but nevertheless, it doesn't invalidate back testing. and another thing is that we're also going to introduce a feature which is a type of paper trading. So you'll be able to use market data and trade on it without it impacting the actual market. So we'll have our sort of own order book for that, which, as you'll probably be aware, helps you with your getting confidence before you actually start trading for real. So I guess the short answer is we don't have anything like that right now, but it has been asked for a lot. And as I say, I would think that you should nevertheless consider trading in smaller quantities in the live market to allow yourself to go forward trading.
Okay, thank you, understand. And
Okay.
also I have, if I can ask you one question more.
Sure.
Yeah, so do you also provide some kind of equipment to be like small market maker, maybe for some instruments? Is also only for big guys, or also like for everybody can be market
everyone
maker?
everyone can do this. Everyone can. This is designed so that really anyone can use this. What you see, this code here, is what you get if you sign up for ProfitView. Choose one of even the hobbyist plans. You will see this, and you will be able to run this, and we will share the link to the GitHub. You'll be able to run this exact code and modify it as you wish. We have some. I think Jahan has a market making algo that he can pretty much provide ready to go. Well, you have your MACD based one, Jahan, I think, and that's available in the GitHub for the guild. So you can certainly do market making work, have a market making operation from this very interface. So
just to add to that, Billy, I think if you maybe $100 as a deposit, I think would be enough to be able to run a market making strategy on BitMEX. Especially if you trade on the XBT USD, like the USDT margin contracts, you'll actually get a rebate on those.
I'm thinking completely opposite, because I've noticed some opportunities on less liquidity market. So I would stay away from Bitcoin and let's say Ethereum and Solana. I found more interesting.
Yeah.
Sometimes new coins coming. Let's say in this week was like 3 very nice coins join BitMEX, but it's like not too much going on because the spread is higher. So I would like to join with the, I don't know, maybe I will put $100 and see how it goes, right? But
Yeah.
I would need some help how to prepare everything.
I think so. I would say, like, if you traded like Sol USDT, or I'm not sure what are the other small time contracts, and some of the coins are
Gas USD.
Which one? Sorry.
No,
Yes.
meme coin is very interesting now. Was so big problem with liquidity, I think, today for people, and
so
it was.
I think
so,
if you traded if you traded the USDT margined contract, you get a rebate. And that means that you'll actually be making money on that. So
this is the point.
That's one of the good things with BitMEX. Even if your volumes are small, on those contracts, you can still have a rebate, which means that you can make the market. It's possible. We have each time an order is filled, you reset all orders to be close to the current market value.
That's the algorithm. It's you may well dispute that as a reasonable thing to do, but it's each. So you basically give it a minute. You get the orders in the market, and you give it a minute to stay in its regime, in its mean reversion regime, and then then you don't want to be in a situation where now you're putting new orders in the market and it's away from. Or you don't want to be out of the market, basically. Okay, so you can argue that there are better ways to do this, and I expect there definitely are. But as a simple grid bot, this is sort of the model. It's a very simple bot, but as I say, extremely popular. So that's part of the reason why we did GridBot rather than other bots. It's simple, so it's easy to put together, and we can show it in a few minutes in the webinar. But as I say, any of the other types of bots are, if you have a little Python skill, quite straightforward to put together. Partly because you don't have to do all the infrastructure, which would otherwise take up 90% of the time in building the thing. Yeah, go ahead.
And Daniel as well. I think a grid bot, or at the very least the 30 or 40 lines of code that I think were just shown, and you can download from GitHub, I think, after this.
Yeah, I'll show the links. Maybe I'll just quickly show them right now. I'll share that screen.
In my opinion, I think that these, I mean, first of all, like you're never going to be for a 40-line file is not going to make you rich. I think it's just as likely to make you wrecked. I think if you got to watch it. I think don't leave it running overnight. It can assist. It is an aid to help you trade. It is not necessarily the thing that is going to trade for you profitably. And it's going to remove a lot of the emotion from trading out of it. If you have an algorithm and a process, you become a cooler trader, as in a more relaxed trader, hopefully.
Yeah. That's right.
And then the other part that I would say is this is just one iteration of what a grid bot can do. And I think that if you have a little bit of Python and you took this as a starting base, and you edited it as it performed, and you saw different things in the market, and you had your own opinions. So maybe you think that Bitcoin is only going to go up. The ETF is going to be approved, and we're going to hit 50K by the end of the year. So maybe you don't want your grid bot to be shorting the market at all. So maybe it only does a reduced position, and then as soon as it hits to a flat, then it longs only. That could be a valid strategy that you add, which has like a vastly different result profile than just a standard one. Or the ETF could be delayed today. We go to 25K, and then your grid bot doesn't do well at all. It just depends really on what the market is.
Yeah, that's right. And actually, if you go to that GitHub, the GridBot GitHub, in the README you'll get to, it has links to the other GitHubs, including one for the BitMEX Algo Trading Guild GitHub, and that one in there we have what I think is really cool. It's a grid bot which runs based on setting its levels not at even levels up from the trading range, but actually as specified by the RSI technical indicator. And there's a general idea, having grid bot. In a way, you have a concept of a grid bot, but how do you choose the levels? Well, there are a lot of ways to choose the levels, and RSI is one. But you could think, that's the critical thing. What are those levels? What is the spread? What are those levels? Then how often do you reset, and so on and so on. You can come to get a sort of a fine art of gridbot writing, and then diverge from there into sort of more complex areas iteratively or progressively as you get comfortable with algorithmic trading. Okay, so go on.
Is it possible to create other order types, or just limit in market?
Well, there is a hidden API which will allow you to use whatever the exchange you're on provides for you. So that's we will document that actually, and so on. So yes, you can do other types, and we will probably over time expose other types, other order types as well. So the answer is yes, you can, and if you talk to us on the Discord, and we'll show you how. And some of that's in the code in the Discord's GitHub as well.
Longcoin wants to know if we can access ProfitView bot scripts information such as high liquidity zones, where limit order are in the order book?
So I actually maybe I'm not well. I don't quite understand the question. High liquidity zones
So-
where limit order. Oh yeah.
How would you do it? You would fetch the entire order book basically. Can you get like the L2 feed?
The answer is yes, we certainly can. But we've had, well, it's less compelling. We've discovered two traders who we talk to. In fact, it's something, this is data which is useful, but we're not sure it's that useful, and it is rather expensive to get hold of. The short answer is we don't yet right now, but we certainly can. And you know, if we keep getting people asking, then we'll provide it. It's not too difficult to provide. So, you know, no, but we can. So I see that someone asked, if we get a huge movement to some side, are there any stops placed? It's sort of like a question of, you know, do we handle can we handle other order types? And so one answer to that is, it's an algorithm, so you can tell it to do whatever you like. So you can detect movements, and then you can keep track. You have all the tools there to keep track of all your orders, and then you can cancel them or algorithmically. So if you think about it, some order types, you get exchanges who produce quite elaborate order types. An order type is in a way a little algo. So when you're writing your own algo, you have the freedom to create that type of thing yourself as an option. Now, of course, often when you have an order type, it's done in the exchange, and so it'll react more quickly, and that's obviously an important point. You know, using the hidden API that we'll make available in the docs soon, you can go to the exchange's native API. So yeah, you can do that as well.
Do we just want to make sure we cover off Danny's as well?
Yeah.
What makes this bot better? I think we kind of answered that as well, right?
Yeah.
The bot itself is kind of up to you when you write it, and you run it in the way that you run it. If you want to shill ProfitView about why it's better than running it on their local, then you can do that, Richard.
Well, okay, you know, it's worth saying that, you know, we run on high performance machines in a data center, and the sort of uptime of our infrastructure is very, very high, and it's also close to the trading exchange. So it'll be tough for you to, you know, you can try, and it'll take you many weeks likely to make a trading infrastructure which is of a similar level. Those latencies, you know, 1.5 to sort of 3 or so milliseconds are really rather good for a WebSocket based infrastructure. So, you know, you give it a go.
The next question, hash K. Anyways, I think the most terrible problem for all market making bots is a huge movement on the markets. You can easily become out of the market, especially if trading engine will deny the request during overloading with huge amount of requests.
I don't know. What do you maybe you can answer that Pez. I mean,
I think
there are risks.
I think Jahan would be a great answer for that one.
Yeah.
You know,
come on.
with your experience.
Yeah.
Experience getting wrecked. Is probably
So I used to work on a market making desk for foreign exchange, where we were one of the top market makers in the world by volume. And yeah, this is with any kind of market making, the problem is adverse selection. You don't want to quote too tightly in such a way that the market, basically you've got the best price in the market, and someone who has better information than you takes advantage of that and basically trades against you, and you know the market's going the wrong way. But yeah, I think all kinds of controls are really important. So one thing about market making is that a lot of these things are driven by events. So, you know, when non-farm payroll comes out, when there's inflation data that comes out, things like when Jerome Powell is basically having a FOMC kind of meeting about the interest rates, all these kind of things will move markets, and you can look up when these events occur, and you can make sure that during those events you want to take more kind of conservative measures, just to widen your spread and do things like that there. And there are
Or
a
the
number of
opposite.
things you could do. Sorry?
Or the opposite.
Yeah, exactly.
You
Or just
can
take
just
a
if you
view.
think you know what yeah, exactly, you can take a view of what's going to happen.
Yeah, definitely. There's also yeah, I think there's a number of things you could put into the model as well that kind of things like stop losses and take profits and things that kind of control your risk. But yeah, risk management's really important. I think there's also a feature in BitMEX as well, which allows you to kind of cancel orders after a certain time. So that's something you probably think about as well.
I talked to some people from a big crypto focused market maker, and because I was intrigued as to how with crypto, and knowing that the most exchanges are WebSocket based, and therefore you have this sort of natural jitter. And you know, so how does it work with an HFT group? And they say, well, we do all sorts of things, right? But the reality is, it's our pricing which is our asset. And so what they would typically do is realize that the market is mispriced, and then they just take the whole book. You know, they just move it up, take everything, and so that's, you know, that may be, you know, something that. And other market makers in the market who haven't seen what they saw are sort of part of their sort of part of their plankton, right? So, yeah, certainly there's a lot of market making interest in crypto, and I guess you guys have a lot of guys on BitMEX.
I'm reading you know, Michael Lewis's latest book, Going Infinite, about SBF.
Yeah.
And yeah, I remember there was a section in it where he was talking about working at Jane Street, and what they did was during the US elections with Trump, they were able to get, for some reason, they had a source of data that was faster than CNBC and other kind of major news providers. It was able to kind of, when the results were coming out, they were able to stay a little bit ahead of the kind of the market, and that worked to some good effect for them, because during those elections, the thing was, like, the emerging market currencies were moving much more. You know, they were moving quite a lot depending on the kind of eventual probability of the outcome. So things like, I don't know if you ever get up a chart of dollar MEX, so the, you know, US dollar against the Mexican current peso, and plot that against the probability of a Trump win, you kind of see this really interesting chart. It's really highly correlated, where the probability of Trump winning, that kind of going up, and and the actual value of the Mexican currency going down. It's like so obvious. And Jane Street at the time were taking advantage of this. So, you know, that's an example of something where if you can get information ahead of time, you can take advantage of that.
It reminds me of the Sam Trabucco tweet threads that he did in 2021 about Alameda having a superpower of being able to predict what the market would do before it was going to do it. I wish I could get that on my laptop, but it's quite funny.
There's a couple of interesting questions here. Is it possible to fetch rolling updates on order book for a specified symbol via ProfitView? And I think the answer is it surely is, because you can one way to do it is you simply keep track of the market because every quote and trade, every top book quote and trade is coming to you via the APIs there. So that gives you, so you can start up you can store data. you can store data. You can even create a database. One of the things I did as an experiment a little while ago is create an SQLite database that and store my data in it, and then do queries on it as I wish to get data which would be useful for trading. Some of the questions here. Remember, what you've got here is Python, and anything in the standard library plus additional libraries are available to you. So the sky's the limit, or however you like to say it. Smiling Billy asks, if the market moves 1% or more in 3 seconds, can the bot cancel all orders in the liquidation zone? And something happening when you're talking about a 3-second period, that's well within the latencies that ProfitView can respond to. So you have access to all the IDs of all the orders you've entered. So you can do you keep track of them. You've got to keep track of them. So you put them in a dictionary, and then your code will cancel them as you wish. Oh, sorry, Bala, you wanted to answer that question. I went and answered it. Do you want to add anything to it?
No, I just marked it as so that you can answer it.
Oh, okay. All right. Sorry. Thanks. Similarly, can the bot access real or approximated information about liquidation zones? You can with Python, you can call out to system. You can connect your bot via the internet to anything you like. So you should think of this as a sort of a nexus of a larger system. If you want to do that, you can have, for instance, I'm looking forward to people doing some machine learning and training data, and then bringing that into their bot in an automated way, and this type of thing. Don't feel you're held back. You have a Python trading system here that you can expand as you wish. Can ProfitView connect to the BitMEX testnet? The answer is it can, but it doesn't at the moment. We're not that. We sort of, it's a bit of a the testnet. It's just that it's not very liquid. It's like it's not the real world. But I mean maybe we can think of, maybe it would be useful for people to use it as a sort of a test bed, and maybe we can think about that.
I think one thing that may not be as useful for users of ProfitView for the testnet is that I think the testnet is very useful especially if you're rolling your own bot. I would recommend, and you're connecting to the WebSocket yourself. You're managing your uptime yourself. You're managing your orders and your responses yourself. I think that is quite useful to do that first on testnet. So there's no issues in your infrastructure, and I would hazard a guess that ProfitView is probably doing that to make sure that their testing is okay. But because they've kind of managed that for you in regards to the where they are and the WebSocket connection and things like that, it's not really as important. At the end of the day, they're trying to write your algorithm, and your algorithm. I mean, yeah, the testnet liquidity is not ideal, and maybe your algorithms it's not dissimilar to backtesting in that way. In that what may be profitable in testnet is not necessarily profitable in production. I'd say.
What's it? It must be USD contracts. Otherwise, the grid has much less sense. It's interesting point of view. I don't quite. What's the rationale for that? I don't. It's not. Really...
It's an issue of rebate. So on BitMEX, you get a rebate on the USDT margin contracts. If you have enough BMEX stakes, so if you stake 100,000 BMEX, you will get a rebate as well, and that'll help you. And I would also just say that a grid can still be profitable. Your spread probably has to be wider. That's all. But I would recommend, especially if you're doing under 1 million ADV and you do not have 100K BMEX, and you have $100 in your account. I think the USDT contracts are quite nice to start on.
Yeah. So Anna asks, can we adjust the algorithm Tau, Heiken, Ashi, and MFI, or would it be too complex? Well, I personally, I think I've heard of these algorithms. I imagine that you certainly can. It's a matter of coding it up. Although maybe I think these involve a special type of candle, if I understand it. That's my recollection. So you have to unpack that candle. I mean, and you should, because the whole thing about this is you have well, not the whole thing, but you have an advantage over, because you can respond to events as they happen in time, or within a millisecond or so. So the algorithm, though, that is rested upon is probably something which can be teased out and built into a ProfitView algo, which would be better than the original. So that's I guess that's answers the question.
Just on that, so the money flow one, I think is interesting, especially when you've got DeFi markets. You have people that kind of track wallets and all kinds of DeFi metrics. Services like Glassnode and other things that track all these on-chain metrics. We did do you remember a few weeks ago, I had a friend of mine, we basically walked through connecting a DeFi kind of node.
API, yeah.
We're getting the updates from that. So certainly possible, like you can, because it's just Python, you can basically connect to all kinds of DeFi information and track some pretty interesting stuff and what's going on in on-chain as well, and kind of use that in your trading strategy. So I guess it's really up to you, really. I mean,
whatever, your Python can go out and explore the internet as it wishes, bring back that data and use it to trade. That's exactly what you should be doing. That's a good idea. Go for it. See. Okay, are you aware of a place where you can find historical bot activities operating a bit? Well, that's sort of information that belongs to the people running the bot and is certainly not available. It may be the case that there is a data repository, that someone else has produced trading algorithmic trading data that can be used for machine learning purposes. It would be very interesting, but I guess you've got to find a way to gather that yourself.
Longcoin, you could subscribe to the WebSocket feed and listen to your guild members, watch what they trade, and then I guess use an imitation learning on that. That'd be quite interesting. But yeah.
Best you could do is to show recorded screen of 10 most investing bot strategies you invented. Videos will answer all questions. Then people can join and just change a bit. Well, what I'd say, Smiling Billy, is join the guild, and then you'll have access to other people's ideas to the extent that they make them available within a guild. Because obviously, I've got I've got a couple of ideas, and I'm not going to tell you. I'm not going to tell you what they are, because I do think that maybe I'll get some money out of them. But there is quite a significant sharing of ideas within the guild and the Discord. It's sort of a it's sort of like an open source thing. You've got a great idea. Will you make it available? You make it available, then someone says, "Oh, I've got a better idea." Oh, well, that's worth it. I've got an enhancement of your idea, which will actually make more money. So that's that works. And that's what we've seen in a few iterations of algos in the GitHub associated with the guild and the Discord. Is there going to be a replay? There is. It is going to be online. There's going to be it's going to be a video available of this webinar. Right? There is, right? Yeah. Okay. So look, wow, no questions. I mean, not that that's Well, that's a good thing, but perhaps it does actually lead us to a convenient moment to end the webinar. What do you think? Yeah.
Thanks a lot, everyone. Yeah.
Yeah. Great. Great that everyone came along. Great questions. Thank you very much, and thank you, BitMEX. It's been good. I think it's been really good.